to the Ministry of Commerce and also to the Beijing. The global services trade is a key driver of international commerce and growth, with exports in services outpacing the growth of both merchandise exports and global GDP since 2014. The global trade in services now accounts for about 50% of world trade in value-added terms. This rapid expansion has been driven in particular by technology and by better communication infrastructure, which has made it much easier to trade services seamlessly across borders. That said, services trade did fall deeper and more sharply than merchandise trade during the COVID-19 pandemic. The global economy is improving, though the recovery is to lower global growth by historical standards. The OECD projects global growth to reach 2.7% this year and pick up modestly to 2.9% in 2024, though I hasten to add that risks continue to be tilted to the downside. In China, the OECD expects growth this year to rebound to 5.4%, up from 3% last year, and to reach 5.1% next year. Service sector activity has started to recover well and has become a major driver of growth so far this year, particularly due to strong demand in both China and the United States. A vibrant global market for trade in services will be essential to keep the global growth momentum going. But there are challenges we could and should tackle. Rising services trade barriers, particularly for services that are fundamental to the digital economy, such as computer services, may constrain our ability to fully translate strong demand into stronger global growth. China is a key contributor to the global trade in services, representing about 6.4% of the world's total services trade value. And China has made some very important progress when it comes to liberalizing its services sector, with further opportunities to build on this liberalization process even further. Consider this, China's contribution to the global services trade is still only half that of what China contributes to global merchandise trade. So there is clearly further room to grow. Several policy tools, including those envisaged in China's 14th five-year plan, can support that stronger growth. First, we see a need for further policy reforms to provide the right enabling environment for service trade liberalization and investment. At the OECD, we're working together with China's Ministry of Commerce and the Development Research Center of the State Council to support further progress in liberalizing trade in services, in particular in sectors such as legal and courier services, and to further explore the application of our Services Trade Restrictiveness Index to help inform discussions on services reform in China. Bridging just half the gap between China's current level of restrictiveness, as measured by the index, and global policy best practice, could reduce trade costs by more than 20%, enhancing the international competitiveness of the Chinese economy. Second, we see a need for further investment in education and skills development. Effective education and skills training systems which provide foundational skills like critical thinking and creativity will be key to ensuring everyone has the best possible opportunity to benefit from and participate in the ongoing transformations going on in the economy in China and globally, and hence to help drive a stronger growth moving forward. Transformations, in particular, the digital and green transformations of our economies. Our 2022 economic survey of China suggests ensuring equal access to education for migrant workers in cities and improving access to high-quality education outside of the mega cities, including by providing more education assistance, helping to cover the cost of primary and secondary education. This could help bridge gaps in well-being across provinces. Currently, differences in labour productivity make up as much as half of the difference between GDP per capita between the leading and lagging provinces across China. Third, enhancing intellectual property rights protections. These protections can significantly benefit Chinese businesses by providing a powerful incentive to invest in new technologies, processes and techniques, boosting competition and business dynamism. Better access to recourse in intellectual property disputes would benefit both innovative Chinese services exporters and foreign investors in the Chinese services sector. In closing, China's policy reform agenda has and can continue to provide a significant boost to its services trade, helping to drive stronger growth in China as well as stronger global growth. The OECD looks forward to further strengthening and deepening our long-standing partnership with China on these and other important policy challenges and opportunities. To further support China's transition from an investment-led to a consumption-driven growth model in which the services sector will play a key part. My very best wishes for a positive and productive exchange at the 2023 China International Fair for Trade in Services over the coming days. Thank you very much.
感谢科尔曼秘书长。